rather than being right, it's being disciplined. And I I could be wrong. I could be wrong, but what I have noticed is that being disciplined is super important when playing in the stock market, because you're trading with real money, and you're trading real patterns, and you're trading with people who have millions and millions and millions of dollars. Hi, mama. All right, you guys. So welcome back to another episode of John's Trading Journal. Episode 6, I believe. Episode 6 or 5. I believe it's number 5. But yeah, welcome back. I know it's been a minute. It's been about 2 months since I made my last video. My last video was pretty much about me taking a break. Reason being was because I got too emotional on a trade. And with trading, you want to minimize your emotions as much as possible. And so I've come to realize that what took me out of my last trade was a little bit of market manipulation. And, a lot of people will say, the stock market's rigged. It's only for the big guys. If you play in the stock market, then you're considered a gambler and you're gambling. To a certain extent, those statements are true. But that's why I said in the beginning of this video, when you trade, you need to minimize your emotions as much as possible, because at the end of the day, um, you're trading an algorithm, you're trading patterns, and you're trading other people's emotions. Um, if you really study this shit correctly, depending on the type of trading that you're doing. So for me currently, I day trade penny stocks. I day trade. So pretty much what a penny stock is, it's a stock below $5. It could be between, a cent, 7 cents, all the way up to $5. But then there's also stocks that are above $5 that also operate like penny stocks. Now that's not what this video is going to be about, but if you are new here, I just want you guys to know what kind of trader I am, right? So, like I said, what this video is going to be about, it's going to be about how I'm going to adapt to this current market, because the current market that we're in, it's not the best for my original pattern that I would trade, and that pattern would be breakouts. So a multi-day breakout, a multi-month breakout, a daily breakout. What I have been seeing that has been occurring more is morning panic dip buys. Now, in the beginning of my trading journey, I'm still very much in the beginning, less than 2 years, actually coming up on 2 years here in a couple months. But within the first couple months of my trading journey, when I was paper trading, I was trading a lot of morning panic dip buys. But in the market that I was trading in, it was one of the best markets that anybody has ever seen. In this market that we're currently in, it's a lot more stable, right? And so what they say, that if you're able to learn how to trade in this market, in a bear market, then when the bullish market comes back, then, not quote unquote you'll be more successful, but you will be more properly equipped with the skill set that you need to execute on the patterns uh, that are displaying themselves for the opportunity. Look at me trying to sound smart, right, with my glasses. So so what I want to do is, like I said, I trade breakouts multi-day, intraday, multi-month. But what I'm doing, since that isn't working and all these breakouts are getting stuffed, um, I'm kind of flipping that upside down. So now what I'm looking for is, I'm looking for beaten down stocks that are at their new, I want to say either new yearly lows, and I'm looking to play that first Green Day momentum. Okay, and so now, like I said, instead of playing a breakout, I just find a stock that's beaten down, and if it fits a certain criteria, and if everything's looking good, then I'll go ahead and enter that trade. Now, currently, I'm not trading. I haven't traded since two months ago. Um, and so right now, really, what I want to do is I just want to track this. Now, I don't have any certain data uh, in a data sheet, in Google Sheets, whatever. I'm only looking really for a couple things. I'm looking for volume. I'm looking for news. I'm looking for sector momentum. Um, and I'm also looking for just key levels. And all that stuff is pretty much fairly simple. Um, and that's pretty much all I can say about that. So let me go ahead and show you guys a couple charts real quick. Actually, really quick, let me let me touch up on this. Within this market, what I've seen is I've seen a lot of um, market manipulation, and that's exactly what happened to me my last my last trade with GME. Uh, I really truly believe it was market manipulation, but I don't want to be that trader that just blames every single mistake on market manipulation, right? Um, but we have to call a spade sometimes. And what I've been seeing within these stocks, and I'll show you an example, and I could be wrong. I could be wrong, or I could be right. I'm not claiming I'm right. I'm just kind of telling you guys what I see and what I think. Take everything that I say with a grain of salt, if you care what I say at all, right? But I've came to the conclusion that not only was it, a newbie mistake of mine, but it also was market manipulation, and that's just the game I'm in. That's just the game I'm in. The big guy is there to win, and it's there to take out small guys like me out. But now, if I'm knowledgeable of this and I have enough reps and I've seen it enough times to know when market manipulation is taking place, then I'm able to take that into account when I decide to either go in or exit a trade. Okay, so now pretty much what I mean by that is, and I'll go over it very, very, very quickly if you haven't seen my last one for GME. Perfect example. I was playing a multi-day breakout for GME. I got in at 164. 160 was my risk level. When it was going down, I was telling myself, Jonathan, you've seen this before. It's gonna go a little bit under 160 just to take out the newbies, and then it's gonna freaking rip. And so then on the other side, I'm hearing Jonathan, stick to your plan, stay disciplined. And so I ended up staying disciplined, and I ended up cutting my risk level at 160. But the other side of me was right. It dipped below 158, and it ripped all the way to 190 by the end of the day. So that was just a perfect example of the market makers knowing where the newbies, aka people like me, where their risk level is, bringing it below that, and then taking everybody out, and then it ends up just ripping. Now, Jonathan, couldn't you just get back in the trade? I mean, if I had the account size, yes, I would have been able to, but then even then, chasing and blah, blah, blah. But the point of the matter is that I should have trusted my gut, but I'm also not that too upset anymore because I know I could be disciplined, and that's what's more important. Rather than being right, it's being disciplined. And I could be wrong. But what I have noticed is that being disciplined is super, super important when playing in the stock market, because you're trading with real money, and you're trading real patterns, and you're trading with people who have millions and millions and millions of dollars. And me, I'm over here with my tiny account, trying to grow it. But at the end of the day, I don't have control. The only thing I have control over is my emotions and my plan and my discipline. So, with that being said, let me go ahead and show you guys some charts. Ooh, I almost stopped it. That would have been bad because I'm on a roll, baby. I'm on a roll. All right, so check this out. Let me show you guys a good example. Let me see if I don't want to say market manipulation, because like I said, I could be right, but nothing in the stock market is exact. Nothing in the stock market is exact unless there's people actually holding it up. And I could show you guys a different chart, but I'm not going to. So check this out. Like I said, I'm looking for stocks now that are completely beaten down, and I'm looking at the biggest percent change losers. So this one has reached a low of $1.78, okay, and that was last Friday, okay, and look at it. It held 178 to a freaking T, to a T, to a T. Look at nothing going down, nothing going down, nothing going down, to a T, almost for 2 hours. And when you trade in the stock market, the time of day is very important to take into account. Reason being is because this midday from 8 a.m. to 11 a.m. there's just nothing happening. And as soon as the afternoon hits, you get this volume, and then it ends up making a new high. So it ended up going from 178 to 189, so pretty much $1. That may not be a lot, but if you have a big size, this could definitely be a good move for you to cash. Not only a good move, but a very predictable move. So this is something that I'm looking for. So now the reason why I have this on my watch list is because I want to see if there could be another second day here, since it just hit the low of 178. But since this is a NASDAQ, it does trade pre-market, and pre-market can just totally, it could go from 189, and then pre-market starts at like 4 a.m., something like that. And by the time market opens at 6:30, it could already be below 178, already making a new yearly low. So that automatically takes it out of my watch list. I don't need to watch it because that's not the pattern that I'm looking for. Okay, now another one that I want to show you guys is, let me show you guys ETHE. This is an OTC. Even if I had money in my account, I probably wouldn't trade this. Reason being, it's because it's such a high-priced OTC. And when I trade OTCs, I'm looking for pennies. I'm looking for like 75 cents, 50 cents, 64 cents OTCs. This one's almost 12 bucks. So, but the reason why I have this on here is because it does fit the criteria of what I'm looking for. It hit a new yearly low of 1135. It kind of consolidated for about, let's see, each candlestick right here is 1 minute. So new yearly low 1, 2, 3, 4, 5, 6, and then at that 7 minute mark, you see that 20,000 volume end up going up, and then from there it ended up reaching not new highs, but it ended up peaking out at 12 exactly, and then it came back down. So yeah, when it hits whole numbers like this, that's very important to look out for. I can't tell you why the stock market, it is what it is, but yeah, this one's very nice. It held up very well. It didn't go down below. It tried to 1135. It supported itself after that third minute. It didn't even get close to 1135. It tried to again. It just did it. And then this was the one where it was like, okay, it's definitely gonna hold some support right there at 1135. And then people saw that, and that's why you see this big volume stick coming in. And then when a lot of people end up going in, it needs to consolidate. People selling their shares, whatever, and it ends up making a new support line exactly at 11.45. I'm sorry, $11.45, and then towards the afternoon again, it ends up going up, consolidating, and then it ends the day very, very, very well. So I'm looking at on my watch list. I'm looking for potentially a nice, well, technically it'd be a fourth green day, but I'm looking for like a nice hefty green candle like this. So hopefully this 1135 right here, this candle, will be kind of identical to this, and so then tomorrow and the following days to come, we could get something like this. Damn. Oh, there we go. Yep, I could get something like this. Now, ideally, I wouldn't hold for this whole entire thing. I just capture the meat of the move of whatever the opportunity presents itself to be. Now, let me show you guys one more. And I'll be out of here. Let me show you guys ALLK. So this is a nice, I don't want to call it a first green day because technically this is the first green day, but this is a very solid first green day. I don't want to say first solid green day, but it's a very solid green candle. And what I was telling you guys about morning panic dip buys, this is a nice morning panic. Consolidates for about morning panic. Let me see, 1, 2, 3, 4, 5. For about 5 minutes, and then it ends up going up, making its choice, and it goes on from there. Now this stock is illiquid. There is not a lot of volume. Like I said in the beginning, there are certain factors that I'm looking for, such as time of day, such as liquidity, volume. I'm looking for news. If there's any news on this stock for whatever for whatever reason, and then I'm also looking at what sector this stock is in. So if it's in electric vehicle stock, if it's biotech, if it has to do something with, well, biotech would have to do something with like producing vaccines for coronavirus or for monkeypox and for cancer or whatever's going on in the world, or maybe it's a weed stock, and for some reason, the government's coming out with news that they're gonna legalize weed, and the weed sector ends up going crazy. So that's so those are the things I'm looking for. I'm looking for sectors. I'm looking for news. I'm looking for liquidity, and I'm also looking to see what pattern it's playing. So, oops. Let me go back to my face now. So that's what I'm doing. That's what I'm tracking on how do you call it? How to adapt to this new stock, to this new market environment, since I'm not shorting. Uh, that's how I'm adjusting. So thank you guys so much for watching. I really do appreciate it. Please like, please subscribe. It helps with the algorithm in my videos going out there, but I'm not doing this for my videos to go out there. I'm doing this to document my journey, and hopefully I do become a successful millionaire trader one day, and people could look back at this and use this as motivation. That anyone could do it, because I'm definitely not the smartest guy. Definitely not the smartest guy, but I believe if I can do this and I could be committed to this, then there's no reason why someone else can't do either. Can't do that either, as long as they have enough interest and dedication. So, yeah, thank you guys so much for watching. I really do appreciate it. Like, subscribe, comment, do all that good stuff. Thank you.